Coming to you from the floor of the CME Group, I'm Eric Wolfman Wilkinson. It's Wolfman Wednesday, November 16th, coming into the zone, the cash money zone. All right, today, take that. We're going to talk about the numbers. A few economic indicators came out this morning. We had industrial production, came in a little bit better than expected, 0.7% versus 0.4%. Well, that looked all good, but then if you look back at last month's revisions, they took that number, notched it down a bit. It was 0.2% last month, came in at negative 0.1%, not so great. Then we had consumer price index. That came in a little bit lower. That's actually looking good. Prices coming down, but with oil trading above $100 a barrel, not so good. All right, what we're looking at is a Sisyphean effort against margin compression here. All right, basically what that is higher prices to the consumer. Manufacturers are going to see those profits because they're seeing higher prices also. Higher prices, consumers not buying, that's where you're getting your margin compression. Not good for the economy, not good for manufacturers, retailers, and stuff like that. All right, now, where we're seeing this is that the FX, Euro FX, the dollar's gaining strength against the euros and most other major commodities. What generally would happen is you would start seeing crude oil start to downtick a bit as the dollar gains strength. Commodity or dollar commodity related products start going down. But right now we got crude oil above $100. As a matter of fact, it just traded about 102. I'm starting to see this trade above all of our resistance areas. Right now, it's looking at about 104.50 is my next resistance area in crude oil. If it gets above that, by year end, we could see crude oil at 115. Take that. All right. Now, we're moving on to what my bond play is. My bond play is right now we're right at a key support resistance area at 102.08 to 102.0812-ish, 0812-ish. If we get above that, we could see it easily trade up to the bond is 140.08, 142.12. If it gets above that area, you're going to see it to go to 143.06. That would be the next target on the upside. If we stay below that today and start trading down, you could easily see it get down to 141.06. All right, those are the two. You got basically a basis point play in between there. Take that. All right. On top of that, we've got the euro dollar. Like I said, it's kind of found a little bit of support here. It's going to start tracking up about 136.24-ish area. That's where I see that kind of coming off this bottom here. It's still not going to be enough to save it going against the oil going way above 102, 105 area. That's just going to really cause a lot of problems in the economy. So when you think that we're here in this kind of virtuous, vicious cycle area with all of these indicators, the dollar gaining strength, oil going up, you would think that this was in a greed kind of or a virtuous cycle where things are coming out of this economy, but we haven't been seeing that really in all the retail sales numbers and stuff like that, though they were a little bit higher, just not anything to get us out of the conundrum that we're in, if you will. So what we are seeing right now is that we are in a vicious cycle, and these things are not going to be helping the economy in the near-term future. So what we need to do is have some of this relief coming from the oil. I don't know how we're going to get that done other than to just start using more natural gas and other things, increase the supply of oil somehow here in the United States through fracking or whatever you will have. But that needs to come down in order for us to be able to have money as a consumer to be able to spend, to buy in this Christmas season to help this economy get lifted out of the funk that it's in. Take it easy. Be back at you again next week. Have a good one.